Good evening, everyone. John McNichol here, and welcome to Income Investing, generating income with dividend stocks for April 9th, 2018. Do appreciate those of you that are here live with us, as well as listening to the recorded session. Let's take care of our disclosures. Carefully consider the investment objectives, risks, charges, and expenses before investing. Prospectus may be obtained by calling the toll-free number provided for you. Contains this and other important information about an investment company. Read carefully before investing. ETFs can entail risks similar to direct stock ownership, including market sector or industry risks. Some ETFs may involve international, currency, commodity, leverage, credit, and interest rate risk. Trade prices may not reflect the net asset value of the underlying securities, and commission fees typically apply. There's no guarantee that a closed-end fund will achieve its investment objectives. Past performance does not guarantee future results. Keep in mind that investing in international investments also involves special risks, including currency fluctuations and political and economic instability. One of the things to keep in mind is that asset allocation and diversification do not eliminate the risk of experiencing investment losses. Investments in fixed income products, as well as REITs, you can see the risks associated with those investments, as well as interest income on capital gains or municipal securities may be subject to alternative minimum tax. Investment commodities are not suitable for all investors as they can be extremely volatile, as well being impacted by world events, import controls, worldwide competition, government regulations, and economic conditions. As well as options are not suitable for all investors as well, with the special risks inherent to options trading may expose investors to potentially rapid and substantial losses. Please look at your previously provided copy of characteristics and risks of standardized options, as well as more sophisticated strategies like spread straddles, other multi-leg option strategies also have a level of risk. It can be riskier than single-leg options and certainly involve transaction costs. Some of that information is provided for you. And minimal potential benefit can be impacted by those significant transaction costs. Now, in order to demonstrate the functionality of the platform, we need to use actual symbols. However, TD Ameritrade does not make recommendations or determine the suitability of any security or strategy for individual traders. Any investment decision you make in your self-directed account is solely your responsibility. Past performance of any security or strategy does not guarantee future results or success, as well as utilizing probability analysis and backtesting. A lot of the information is theoretical in nature or based off of past history and does not guarantee that a certain event will occur, as well as with backtesting strategies that are implemented today may not produce similar results. And as always, folks, all investing involves risks, including the risk of loss. Okay. Once again, do appreciate you being here with us today. And go over a few administrative notes. Good afternoon, evening to you, James, Walter, Fennell, Barat there. Thanks for being here. I'm going to go ahead and go to the TD Ameritrade website. Bring that up right here. And if you don't already know, we do have a new schedule with our webcasts. Now, for this income class on generating income with dividend stocks on an ongoing basis, as of right now, this session will remain in this time slot. However, some sessions have been moved around a bit. I'm also sorry to say that I will not be teaching this particular session going forward over the next quarter. Good friend Connie Hill will be picking up this session, I believe, starting as early as next week. Now, I have sat down with her and we discussed the practice portfolio that we have practiced with and put together over the course of the last few months. And she'll see if she can integrate that into some of the discussions. So don't feel that you have to start fresh there. have some talking points and some examples to review going forward there. So when you go ahead and access the webcasts, they're accessible through our Education tab. And right over here under the events here. And you can take a look at some of the sessions that are upcoming throughout the week there. Even some new sessions coming online, such as Mr. Script, for those of you that are really into some of the program functionality of the Thinkorswim application. In fact, I'll be doing that session tomorrow, and Ken Rose, another good friend of mine, will be picking up on that session in coming weeks. And as we go down, you'll probably see some other new sessions that may appear, particularly in the end of the week. Well, actually, if you'll notice, we have a series of futures classes. As was mentioned, disclosures, futures are certainly not for everyone, and not everyone is necessarily approved for futures trading. But for those of you that are interested in learning about that, we have 3 sessions, one for beginners getting started. That'll be on April 11th, and I'll be teaching this class. In fact, I'll be involved with many of the futures classes going forward, as well as some of our active trading series too. So for myself, if you go ahead and look at some of the schedule, I'll still be going through the swing trading session, which is tomorrow morning at the market open. And also Mondays and Thursdays at the market open we'll be focusing on futures, both from an advanced as well as a intermediate aspect as well. I'll also have a technically speaking session, which is on Mondays. Some of you may have caught me earlier. Those are accessible through the Thinkorswim platform. However, they are being simulcast on YouTube as well. So again, trying to make things much more accessible for a lot of you, and so hopefully you'll appreciate some of the little growing pains here as we get some of the technology online, as we updated the website, the webcasts, and try to give you every opportunity to be able to connect to our education, whether you're on the TD Ameritrade website, on the Thinkorswim platform, and potentially mobile as well. Okay. All right. Now let's talk a little bit about our agenda here today. Let's bring up on the Thinkorswim platform here. Take a quick look at the market. Certainly review our practice portfolio. We'll spend a little time with the TDA Ameritrade screener. Last time we met, we had focused on the scan tab on Thinkorswim and showed you how to create a scan based off some of the criteria that are discussed in the coursework. We'll take a look at view and watch lists on the Thinkorswim platform, as you can go ahead and customize the watch list however way you'd like. If you want to view some particular information on the stock, possibly some of the criteria that are discussed in the course, like dividend yields, 5-year averages, PE ratios, things like that. We'll show you how to do that here this evening, and time permitting, possibly put in another practice trade on our portfolio there. Okay. So starting off with the market, go ahead and look at the charts here. We have the SPX on the screen right now. Volatility continues to dominate a bit here, as over the course of the last week we have seen some pretty large range days to the tune of on the S&P, today about a 40-point range, which is relatively smaller compared to other days where we've seen ranges of 70 points and more. Certainly pretty significant as you look at the size of these candles as compared to candles going back in an early part of the year. Technically, you'll notice looking at the price action, that prices, even though that they have fallen, they've been whipping back and forth, and even though some wider range days, it is still nevertheless a range as the bulls and the bears continue to posture themselves and try and find some direction. We are going into another earnings season, and certainly that may create, again, kind of more of this consolidation here as the market waits to see the outcome on earnings and expectations for growth going forward. Certainly everything in the news as far as with tariffs to see what actually happens versus what has occurred with a lot of the talk. Now with this class being dividends and income, the time frame on a lot of these stocks are certainly much more longer term and a buy and hold. However, one certainly needs to understand how if the market certainly sells off or continues to sell off, that can certainly affect returns on the account. Also, being is that dividend stocks, income producing, there's a yield there. A lot of investors may also look to see what yields are on government treasuries, and certainly interest rates have been going back and forth. If we bring up an example of TYX for the longer term 30-year treasury, since the beginning of the year, yields have been rising. However, with more of the correction in the stock market, notice yields have actually dropped off a bit from those highs in February. And if yields do continue to drop, that may make some of the equities on the income side to possibly be more desirable. However, if interest rates continue to rise, with government treasuries typically being significantly less risk compared to equities, then individuals that are looking for income may be driven more towards those treasuries. However, even treasuries certainly have risk, as when yields are rising, bonds will drop. Okay, they just may not be dropping as much as equities if they're still correcting. Okay, so interesting formations as far as with some of the yields, which have been drifting down since mid-February, and did take a bit of a pop over the last week, a little to the upside, and backed off again over the last few sessions. What some technicians may look at as far as with the yields is identifying areas of resistance there and seeing if that price action, well, in this case the yields referencing the bonds, which would be selling off if the yields rise and break out. Okay, so a bit of a brief overview for you on the market there. Looking at things from a longer term, we've been focusing a little more over recent history here. If we go back and switch this to a weekly chart, the green line that's on the chart is a 55 period average exponential. Since this is a weekly chart, think to the line that's about 55 weeks. Certainly well over a trend occurring over a yearly basis. Notice that there's been a lot of tests, and in some cases actually breaks of longer term support. And in this case, the S&P is still staying above some of these averages. If the market sells off and takes out some of these lows, that certainly can continue to put pressure on equities and have an impact on our practice account as well. And a lot of you may have certainly heard a lot of talk on the news from the highs of the market in February to where we're at here, we're seeing corrections to the tune of about 9%. However, they have exceeded 10% in some areas or more. Corrections of more than 10% are considered to be more corrective territory. And if longer-term support continues to break down, you may hear more talks of more of a bearish sentiment in the market. Okay. If anyone has any general questions on what we discussed here, feel free to go ahead and type that in chat there. Looks like we have some great participation here as well, with a lot of you here live this evening, so it's great to see some good attendance here. Again, personally disappointed that I can't spend some time with you on this session each and every week, but you'll be able to see me on some other sessions and also have an opportunity to listen to some other great coaches such as Connie here, Connie Hill, coming up starting next week. Okay, let's go ahead and look at our practice portfolio. We're going to go to the monitor tab, and from our discussion last week, we entered a practice position on UPS, United Parcel Service. Now, made a mistake concerning some of the allocation that we discussed. For illustrative purposes on this practice account, the intent was to allocate typically no more than 5% on any individual stock. And I must have messed up a little bit on the math, because 150 shares of this stock, if we go ahead and view the trades, purchase the shares, and this is a practice account, demo account, for about $104. Now, 150 shares of stock that's over $100 certainly translates in about $15,000, which is actually closer to about a 10% allocation. Okay, and so what we'll do as an example on correcting this for our illustrative purposes is I'm just going to go ahead and scale this down by selling part of that. As you can see, mistakes can happen. And for illustrative purposes, I'm just going to, for this practice trade, close it out at the opening tomorrow. So market orders do not have control over price, but certainly it would, for this example, be filled at the market open on the practice account. If we specified a limit order and specify a price, no guarantee that that would be filled, but if it is marketable at that price, then it would. Okay. All right. So going back on the monitor tab, notice looking at the P&L open, the positions are down. Now, a lot of these transactions were scaled in, starting going back around January 30th, and we've seen what the market has done since then. Relatively speaking, this was an example of about total or cumulatively about $80,000 of securities. So $80,000 with a loss of about $3,900 if we bring up the calculator, and this is to illustrate some of the downdraft in the market and how that can affect any stock, whether it's a dividend payer or what one may perceive to be a quality company, as looking at the list of some of the companies that are here. If we go ahead and take at 39.41 and divide it by the cost of the securities, which I had earlier calculated at around 80,263. This portfolio is off about almost 5%. Okay, almost about 5%. Now, relatively speaking, if we were to look at the market, and from bear with me here. From January 30th, and Notice perfect timing for our example. I certainly say that facetiously. When we started the class here on around the 29th and 30th, right at the market top. Okay. Again, positions were accumulated over time. And looking at the SPX since that time, in fact, let me go ahead and go from the market, run the market open there. You know, the market is off about 7.62%. So really this portfolio is built up as a practice over time. Sometimes the prices were higher, sometimes they were lower, and with the intent of putting together more of an income producing account. So again, relative to the market, the account not hit as bad. Now that can certainly change. And if we go ahead and look at the dividends, you have a tool on the TD Ameritrade website. Whereas if you go ahead and look at an individual stock, the income estimator, we've been highlighting this tool each and every week. And I have it pre-filled out here. When you click on that link, it gives one the ability to bring up a portfolio if you happen to. Certainly, this is a demo account as well, so no real trades in that. What I did was created a watch list of stocks that simulate our practice account and plugged in the number of shares for each of those stocks. When that's calculated, that will actually bring up the payment calendar, where the expected income for the stocks that are in this practice portfolio. Notice from those of you that followed since early January on how a lot of these areas have filled in. So at least expected to generate some consistent income on a month-to-month basis. However, dividends, this is the estimated annual income. Certainly if some companies struggle with paying their dividends, revenues go down or cash may not be as readily available, companies can certainly cut those dividends and that can impact this income. So again, this is an estimate here. We also have what's provided is the dividend yield for the populated list. Now, that dividend yield is based off of the current prices versus the dividends or the anticipated dividends over the next year. Okay. Now, with that, if we go ahead and apply with this, as far as with this yield, this is the current dividend yield, there's a calculation called the yield on cost. And the yield on cost is actually taking what was paid for these stocks, and again it was about $80-some thousand in securities, being divided by the estimated annual income, which in this example is $3,400 and about $12 there. So if we go ahead and take that $3,412 and divide it by the cost of securities, which again was about $80,263. The yield on cost on the portfolio is about 4.25%. Okay. And that yield on cost may change in the future if dividends continue to rise, share price continues to rise, then this yield will increase as well. All right, and so that's something that you can go ahead and check on a regular basis, whether quarterly or twice a year, to kind of see how you stand there. Now, looking at some of the questions there, Bob says, in paper money account, do the dividends to add shares, or would you have to add the shares manually? Yeah, in the paper money, it seems that you would probably have to add the shares manually. It wouldn't automatically invest. In fact, with the paper money account, I've been also trying to see if some dividends would actually be paid out. And the paper money may not actually track that out as much. Okay. If I go here and look at on monitor and account statement, this is where you can bring up all the different transactions. You know, from a historical perspective, if we go back, let's say the last 100 days, and bring that up. And if this is on your real account, certainly you can bring this up as well. If I click on transactions, I can limit this to whatever trades and any dividends that may have been paid. And as I look at this example here on the practice account, doesn't look like there's examples of dividends being paid out there. And I believe some of these did have some dividends paid out, but it's not being calculated, unfortunately. All right. However, on your real-time account, that should basically come up for you. Okay, David, I'm not sure I understand the statement as far as dividend income stocks. I thought we were talking about that. Let me know if you disagree. All right, so that's where we go ahead and we stand with our practice account right here, and we'll continue working on that. And like I said, this will be handed off to Connie as well. So let's go ahead and take a look at the TD Ameritrade screener. And we'll integrate some of the criteria from the coursework here. So coming up here to education, if we come up here to education and we go to overview on the education tab, and this is something that I wanted to highlight as there's been additions for various courses added to the website. If we scroll down a little bit, you'll see some of the new courses that have come online. Notice we don't see income in this list because the income course has been released earlier. If we scroll down a little bit under all education, and we have all topics, and if we come here to media type and change this to course, this will be all of the various courses that are accessible for everyone through the TD Ameritrade website. So everything from portfolio management, which is a great starting point. Income investing is just one segment of our overall portfolio management. And so the portfolio management is a great starting point for those of you that are still trying to work out an overall portfolio plan. As you can see, various other instruments from fundamental to technical analysis. And if we go to the next page, we should see the income investing course right here. So we go ahead and go to the course. Yeah, the income estimator, great tool. That was fairly introduced relatively recently. And so it's a great powerful tool to illustrate a lot of things that are taught in the course. And as well, we can see where we stand with our practice portfolio as well as income, dividend yields, and be able to calculate the yield on costs there. So we come here to the income investing course, looking under resources, under sample investing plans. This is the template that we've utilized, which takes a lot of the information that is in the income course and applies it to a sample plan. As always, you want to make a plan your own. As we scroll down through here, and looking at some of the watch list criteria. Now, those of you that were here with us last week, or if you looked at the recorded session, we went ahead and reviewed a lot of these different criteria. What we're going to do is we're going to take this and apply it to the, for this session, to the TD Ameritrade website. So we'll go and we'll keep this criteria here. And let me go ahead and size this up a little bit. And let's see if I can go ahead and separate the course here. So what I'm going to do is come up here to Research Ideas and come to Screeners here. So we're going to click on Screeners. Now, as it comes with many platforms, not one tool is going to do everything. We outlined some of the powerful features of the Thinkorswim platform last week, and where a lot of these criteria are available on that platform. As we go to the TD Ameritrade Screeners, some of those criteria may be here, some of them may be lacking, but can still put together generally a decent list of criteria for dividend stocks. And as you look here under My Save Screens, we have previously created one here. And if I go ahead and click on that, it's going to go ahead and run through a search and give stocks that may meet various criteria. Now what we're going to do is we're going to start this from scratch. So we'll come up here again, Research and Ideas, and go to Screeners. If we scroll down the list under Stock Screens, and if you don't see Stock Screens, you can also select Stocks. And it should come up there as well. There's going to be some predefined stock screens. One's based off of ratings, such as strong buys and buy ratings. Technicals, based off of various technical criteria. And we'll select fundamentals. Now, if you look here, value, growth, dividends. Now, if you look at some of our different webcasts, we have a session that focuses on value stocks. We have a session that focuses on growth stocks. And certainly with this one being more income is dividends. Okay? So if we go ahead and click on this one here, and brings up 1,462 stocks. Now, probably not a very actionable list to have a list of criteria that comes up with 1,462 stocks. So let's go ahead and actually modify this search. It says Modify Screen. We'll go and click on that. And see that really all this screen is doing is looking for dividends that are greater than 3%, with the average in the market being about 2.31%. So a few things that we can do to go ahead and scale this down, very similar to some of the things that we've applied into the Thinkorswim one. Certainly one is price and volume. We'll just start off with that example. If we go ahead and select price, and under specific values, you can determine what you're comfortable with. Let's say, as an example, looking for stocks that are greater than $20. You can click all the ones that are applicable. 697 matches, still a lot, but certainly just cut the list in half based off of that. We can go ahead and select volume. For instance, look at a volume range and looking for volume over a certain number of shares. Let's say for our example, we'll plug in 1 million shares. I believe I plugged in 1 million there. Let's see. Starts a little truncated here since we have a bigger screen here. All right, so notice right there, just with those two criteria, went ahead and took it down to 141 shares. Okay, and yeah, looking at the chat there, Robert, I need to share with you that, and has been bugging me for the last few days, and you reminded me. I knew there was one thing I was supposed to research from this last week, and I couldn't figure out what it was, and thank you for reminding me. So what I'll have to do is after this session, I will go ahead and do the research, and I'll stay as late as I have to tonight to get an answer. And what I'll do is for next week, if it's Connie that's doing that session, I'll have her headline that for you. Okay, the question was being able to go ahead and find, if you can find stocks where the current yield is actually greater than its 5-year average, which is one of the selection criteria right here. There's not a turnkey solution, but my promise to the class was trying to see if there was a way of programming something on the Thinkorswim platform to do that. Whereas a lot of the criteria on the TD Ameritrade website are pretty straightforward, and what you see is what you get here. So, but notice here with some simple criteria, we've narrowed that down a bit. Now, if we want to incorporate some other things here, we've already incorporated yield, which is 3%. That's a reasonable benchmark for this example, greater than the market average. And if we want to drill down and look at some other things, we can go from top to bottom here. One thing that some investors may do is look at things such as market capitalization. You know, if we click on market cap, they may look to diversify and look for dividend payers over, you know, small, medium, or large cap, or they may focus on the larger caps. You know, if I click on larger cap as an example, notice a lot of these happen to fall within the large caps. So we'll leave that there as an example. As we go through and look at some of the other criteria, such as fundamentals, in the criteria list over here, there is one for return on equity with an example of 18. Points towards that effective management. So if we go ahead and select that one on return on equity and modify that. Now you can put in a range or you can enter specific values. If we plug in 18, notice the list went ahead and dropped right down to 40. Okay. There's other things here, you know, such as EPS growth. If someone's looking to incorporate growth in the mix, they can do that. And you know, there are some other criteria like cash flow. You know, looking at debt valuations as well. So we'll leave that blank for right now. Go into valuation. There's the PE ratio. So we'll click on that. And as we look through here, PE ratio average right now, trailing 12 months is around 24. An example on the plan is looking between 5 and 25. And again, these are just examples. As we go ahead and modify some of these, a trader may go ahead and actually, or an investor, may adjust these criteria to their liking. Depends on how many results they want to get. And so notice as we go ahead and drill down, we went from 1,400 stocks down to around 32. Okay. There's some other valuations. You know, if someone wants to incorporate price to book or price to sales, they can do that. We already addressed some of the dividends here. You know, someone wants to incorporate technicals, they can do that as well. And you know, there's even ratings in here as provided by some third parties, not provided by TD Ameritrade, but if one wants to incorporate some of the analysis in there, they can do that too. So let's say we go and look at these examples and see what has popped up here. Now notice some of the criteria that were discussed on the Thinkorswim platform, such as the payout ratio, is not a criteria here on the TD Ameritrade website. Current ratio, I believe, is another one that may not pop up on that. And not saying that these are all make or break criteria. One criteria doesn't stand by itself. It's kind of looking at the whole picture there. But we could take those results, put it into a watch list on the Thinkorswim platform, and be able to look at some more of this information, such as the payout ratio, incorporate debt into the mix as well, or at least display that on the list. So let's actually go ahead and do that. So bring in the results, we click on view the results, and here are some of the stocks that have came up, about 32 results. Now, if that screen is acceptable for what you're doing, you can actually take that screen and save it. So usually should be down on the bottom here, save this screen. If you click on save screen, you can name that whatever you want. And we'll click save screen. And so now, whenever you go ahead to your screeners up here and look at your My Save Screens, here's the one that we just created. Now what that does is it doesn't save the stocks, it saves the criteria. And so when that's ran, it will give the results, and here was today's results right here. So if we go and click on it again, it'll bring up those results. Now because of the resolution, some of the information is kind of truncated here. But if you see at the top here, see complete table, if one clicks on that, you can bring up much more detailed information on the list of stocks, and can go ahead and drill down and look at some other things. You know, here's return on equity, you know, management effectiveness, and certainly one can go ahead and search and look at some of those percentages. Or if one wants to go ahead and sort by PE ratio, they can go ahead and do that too. And notice this is just the screener criteria. If we look at the views up here, one can go ahead and drill down and look at things like fundamentals or valuation. See EPS growth, you know, looking for dividend stocks that may still have some semblance of growth. All right, so quite a few data points that one can go ahead and bring up here. Even look at some of the third-party research and see what some of the rating changes have been, whether downgrades or upgrades. So pretty powerful stuff here. Now, let's say we go ahead and take the example of these symbols. We'll do select all. Now, since I do have a paper money account, and these accounts aren't quite as linked, if you were to save these symbols, which we just checked, and add them to a watch list, we'll click Add Watch List, and that should bring up a pop-up here. You can add them to an existing list, or go ahead and create a new watch list. We'll hit Create Watch List, and we'll save that. I'll put a date here, and we'll go ahead and we'll select Create. Now, if you did this on your actual real account, which is what you'd be doing if you're on the TD Ameritrade website, those lists should carry over to your Thinkorswim platform, and you can go ahead and bring that up. So I may have to go ahead and do a little bit of a trick here on our end here. Bear with me for a sec. Basically, that export list will enable one to go ahead and copy it to a spreadsheet. Whereas you wouldn't have to do it automatically being logged in your account. I went ahead and just copied those symbols. Now I'm going to go ahead to the Thinkorswim platform and I'm going to come up here to Market Watch page and go to quotes, and you can go to any quote page. Click on the drop down, and if you don't see it here, over in the right side under the menu, you have an option to create watch list. And so we'll create this watch list here. Type in dividends, and I'll type in April. And there's a button here for import. So again, if you have a list of symbols, maybe from an external website or a file, you can go ahead and copy those symbols in. Or if you just copy it off of a website, as we copied it from a spreadsheet, and paste the symbols from a clipboard, here's a list of symbols from those results. And I'll click OK and save. Oh, looks like it actually did copy it over on this, so looks like these accounts did link up for us. So let's see if that actually comes up. So I'm going to come here to go to Watch List, and under Personal, and click on Dividends April, and it may have been one from earlier in the month. So let's go ahead and try again here. We'll go ahead and watch lists. And we'll import, paste those, and click OK, and save. And then what we can do with a list is we can actually modify these quote columns here. Now, I actually did this over here on the right-hand side of the application. And on any windows on Thinkorswim, if you actually go ahead and click on the upper right of the window, you can select Detach. And so we'll select Detach Gadget here. And you can free float that window and make it as large as you want. So that way you can view more information at the same time. And notice we already have some criteria here, like percentage changes, PE ratios, current ratios, and then here's some of the yields. For instance, the yield versus the 5-year yield. Now I'm going to go ahead and bring up the results from that scan. So there we go. And if we want to go ahead and customize this, just go ahead and right-click on a column header, any of these column headers, and select Customize. And think of some of the criteria from that other list. For instance, again, we already have the yield and dividend yield. So if you haven't already added this as an example, yield will basically bring up the trailing 12-month yield. And then if you add dividend yield, that one's customizable. When you click to add that and slide over, there's a little selection here. When you click on it, you can select current, which is trailing 12 months, or the 5-year average. We selected the 5-year average. Other things one can consider to add if they wish is we can look at debt, long-term debt to capital. That was one of the criteria from the search. If we go ahead and add that, that'll add that to the list. And again, can look at things from a current, annual. Another thing that can be added is the payout ratio. So dividend payout as a percentage of earnings. We'll go ahead and add that one as well. And you can go ahead and move these wherever you want in the list. Or once you add that, kind of like Excel, you can left click and drag these columns wherever you want. So there's our dividend payout ratio. Here's PE. Here's a yield versus dividend yield, and here's long-term debt. So fortunately, for example, as we look at percentages for long-term debt based off of this information, all of these are less than 100. We're based off of that sample plan there, so we can bring that up. And it looks like that didn't want to come up here. Let's try that again. Long-term debt ratio below 100 indicates the company has more capital than debt. Certainly that's a concern for some investors. And looking at the dividend payout ratio below a certain threshold, in this example, 70%. Increasing cash flow or positive cash flow. Again, these are all criteria you can add on this page here. So we got examples of cash flow. Here's the current ratio. Here's the payout ratio. Now notice one of these examples, these are current account positions. We see Coca-Cola as an example has a pretty high payout ratio for this list. So it'll be interesting to see if there's any pressure as far as with the ability of them continuing to pay out that same dividend. That could be a concern. Now, if we go to the list of stocks from the watch list that we ran, here we go right here. Again, we can see these percentages and sort through here. Now, let's look at the dividend payout ratio here. A couple of the examples like IBM and MMP that came up on the list are relatively high. Some of them are above 70. A lot of them are below that. And some of these are actually on our practice account, such as General Mills, UPS. So basically going to the same examples that stocks that have met those different criteria. I do apologize, John, if you're having problems with a watch list. There may be a limit there, although I thought it was significant size there. You may be able to add them to an existing list here. Now, one of the things as far as application on our practice account, we've discussed a lot about diversification. So, as one goes ahead and whether running through some of the scans or searches, and considering stocks as they may be building up a portfolio, as we look at our example on our current account positions, notice as far as these stocks are in various sectors. Some that have a tendency of paying higher dividends, like utilities, consumer staples, but also examples of discretionary stocks, materials, so kind of spread out even on the energy side. And so looking at some of these different criteria here on the list, notice one can go ahead and right-click and add sector as part of that as well. Now, if you go ahead and create some of these different pages here with this format, and add whatever criteria that you want on there. If this is something that you wish to come back and access to, you can actually save everything that is on the desktop as a workspace by just coming up here where it says Setup and selecting Save Workspace As and calling it whatever you'd like. If you have an existing workspace, you can overwrite that. And we'll click Save. And so now basically these pages are all right here. Now if I went ahead and changed this setup, this is where you can go ahead and switch into different areas here. So let's say I go ahead and load a workspace from an active trading class that I may teach. and then come up here to setup and bring up that one that we had saved. And as that loads up, notice everything was right where I left it, and here's that detached page with all that information that's on there. So you don't feel that you have to go ahead and re-event the wheel. John says, does that include the scratch pad? That is a very good question. Let's see. I'm going to go ahead and switch back to a technical one. If I go to scratch pad, yes it does. That is a separate scratch pad there. Some notes from a futures instruction here. And if I go back and go to that other workspace and look at the scratch pad, there's our notes for this evening on generating income with dividend stocks. So thank you, John. No matter for how long I've been working with this application, seems that we can certainly learn something new every day. So it will go ahead and save that workspace there. All right, folks, so we are getting to the top of the hour there. And as we go ahead and look at some examples of stocks that came up on this list, and again, looking at examples of diversification, we don't have examples of healthcare stocks in the list per se. And we go ahead and look at, well, technically a lot of these stocks have also been beaten down a bit. And another concern is we are going into an earnings season once again. As you go a little forward here, you can see some earnings here as prices are down quite a bit from some of those highs. Certainly there is some risk associated with that. Let's look at one example. The other one, Amgen, ABBV. So here's an example with ABBV that is approaching a longer term support. That longer term support may hold, it can certainly break down. And the stock hasn't necessarily bounced here. Now, some investors may look for prices to actually reverse, may wait to see what happens with earnings. What we'll do for instructional purposes is we'll allocate a partial practice position. We've attempted to allocate about 5% on each of these positions. We'll do an example of a half of that, which would be 2.5%. And we'll have Connie follow up and see what happens after earnings, what the impact of that is. So again, these are for illustrative purposes here. If we look at the share price is about $90, $9.50. 2.5% of this portfolio. We take 145,992 times 2.5. Actually, I should do 145,992 times 0.025. That would be $3,600, $3,650 divided by, we'll do 90/50 as an example. And so that'd be about 40 shares. So we will go ahead and enter a practice trade for this example. We can right click on the chart. We can hit buy for our example, and we'll edit the number of shares. And again, diversification, as we can tell, certainly on this practice account does not insure against loss. But as an example, we are spreading risk amongst different areas of the market. So we'll see for that to fill tomorrow there, and we'll have Connie follow up with that next week. And to John's question earlier, we will go ahead and get you an answer as far as searching for current yield versus the 5-year yield. See if that's possible on the Thinkorswim platform. So we are at the top of the hour here, folks. We do have a webcast with James Boyd. Can't miss. Remember, everything we discussed here today is for illustrative and educational purposes. The instruments that we looked at were to demonstrate the platform as well as teach the concepts that are in the income course, and is not a recommendation to buy or sell any particular security or endorse any strategy. Any investment decision you make in your self-directed account is solely your responsibility, as well as past performance of any security or strategy does not guarantee future results or success. All investing involves risks, including the risk of loss. So thank you so much for your time, folks. Great participation. Looking forward to seeing you again on another webcast real soon. Bye now.